Wednesday, March 26th. I'm currently on some sleeping. I took a pill. I am dieting. I am exercising out the wazoo, trying to get my weight down. I've got a trip planned in May with a hiking stuff, so I've got to get in shape. Your boy's just getting fat and lazy. Your boy's just getting fat. I mean, that's the reality of it. But we're going to go over a lot. We're going to go over the Mag 7. We're going to go over Finviz, using Finviz scanners for technicals, and the 200-day, how important it is. Large cap tech stocks with the highest buy ratings. We'll go over Amazon, Nvidia, Microsoft. A couple of upgrades in the quant that I see of quite a few. Apple is just trudging along. GameStop with Bitcoin. I told you. Fannie Mae and Freddie Mac, should they be privatized? And then a couple of financial independence, retire early things, podcast and an article that I read that I think would benefit everybody if you're interested in retiring early, or even if you're interested in retirement. They were very good. So let's talk about where we're at. I was just going over, if you want to know where I think SPY is going and stuff like that, the YouTube live portion has that. I'll go over a little bit of it here, but I don't typically go into detail. But I just think you're range bound. And if you go and look at a weekly on QQQ, I think the top is going to be around 540, 550. And I think your bottom is going to be around that 450 portion. I don't think we're done going down. I think you'll have another situation where we go down. But I do think overall, we end the year higher than we are today. Doesn't mean we end the year higher than we started, because we started the year, let's see, January 6th, this week, it opened at 523. 523. We're at 504. I'm sorry, 493. So it'll take us getting back up there. The Qs are a bit more than the S&P, and we can track the S&P perfectly by SPY. And I've done this before. I put in a little chart on VOO. Let's look at VOO, because that's the preferred ETF. And you can see I put in this chart, and I think that's the range that we trade in, and we've just gotten back to it. You know, this week's low, 525 on VOO. You're trading at 530. Now, this volume line right here, it's October 2023. If we look at a daily chart and we pull the volume back to the election, because I think that's going to be, I mean, let's be honest, Trump only cares about his election stats. So if we pull this back to the election, November 5th, right there. November 4th. Let's pull it back. November 4th, right there. Look at the volume. The volume levels are significantly higher. So I do think that we go higher. But you're in a market that can be taken down by a tweet. And so we look at this a lot. We look at the CNN Fear and Greed Index. Remember, this was at 17. And now we're at 29. So we're moving from extreme fear to fear. I don't think that the market has a recession priced in. I don't think that the market has April 2nd priced in, effectively, if it's bad news. So you just got to realize where you're at, what your risk tolerance is, and we can take a look at the VIX. I think it's at 18 now. Let's see, it's 17. And look at the 5-day. It's come down. And remember, the VIX is the volatility index, and we can take a look at the 10-year. If we go and look at the 10-year, U.S. Treasury 10-year right there. If we look at the 10-year, it's at 4.36. Look at the 5-day. I mean, it's coming back up, which means money is coming out of the bond market into the stock market, which is good for stocks. But is that sustainable where you have April 2nd, what is it called, Liberation Day, hanging over your head? I don't know. I don't think anybody knows. I think you're dealing with a lot of uncertainty. But in reality, we pulled back. We're trying to gain this 200. We're going to talk about the 200-day. Okay, I'm going to show you on Finviz how to scan for stocks that are under their 200-day and maybe what brings you interesting. Now, I do want to bring up the Wolf guys are at the Robinhood Summit. So stay tuned to their Twitter feeds. for some breaking news because I'm sure they're going to break something with Vlad. They've got a bunch of interviews going on, but again, it's an event. Now, let's talk about Tesla. Let me just tell you, I listened to the Mag 7. We talked about it yesterday. If we go over to my Twitter, there is a tweet. Let's see, my profile right there. If we go down, there was a tweet yesterday, and I included it in the newsletter about the this one, which sectors contributed. The Mag 7. They made up 43% of the downturn, okay? But they only make up 30% of the S&P. Any reaction in the market is an overreaction. I believe that the Mag 7 come back. It's what I believe. Again, I may be wrong. I am still big on the Mag 7. I haven't added to any positions that we can look at the algorithm for some of these. But Tesla in particular, I want to just make this comment on Elon. I'm not a big fan of Elon's, and I don't think anybody within Tesla is a fan of him getting all political. But I listened to Gene Munster yesterday, and he talked about how great XAI is with Grok right now. I'm going to do a test. I'm going to Colorado in May, and I'm planning hiking trip. And I used Perplexity last night, but I said, you know what? Why don't I use Perplexity, put the same prompt into Grok, put the same prompt into Google and ChatGPT, and then compare the four. And that's what I'm going to do. And I'll include it in the podcast when I do it, probably today. But Gene said how amazing Grok is. And I believe it. I use Grok all the time. I have the app. You know, if you ask 9 out of 10 people, or I'm sorry, if you ask 10 people on the street, what's Grok? I bet you 8 don't even know. 8 don't know what Grok is. They don't know what AI is. But Gene was talking about how great it was when Elon took over Twitter. And this is leadership. He cut 70% of the staff. Okay? He cut 70% of the staff because it was bleeding financially. Okay? No matter what you think of Twitter's current situation, whether you like it, whether you're on it, what? He staved off Zuckerberg with Threads. Remember? When Elon took it over, Zuckerberg said, we're going to take this. We're going to take all your users away. We're going to launch Threads. And then Jack Dorsey launches Blue Sky, which hasn't even really gotten off the ground. Okay? The point is that Elon took it over, cut 70% of the staff, made it much more profitable. I think 4 times more profitable. Don't underestimate Elon with Tesla. Okay? He said he didn't think Tesla would trade well. This is what Gene said. Until they get it turned around from a car company to the new mission of AI and robotics. And he said, it's probably not this year. And what does Cathie Woods do? She comes out with a $2,600 price target. It's trading at 288. It's 10 times your money. She was right before. Is she right now? We'll see. We'll see. But again, my point is don't underestimate Elon on this. You can have your political opinion on him. And I do. I'm not a huge fan. I am a fan of the cars. I am a fan of SpaceX. I am a fan. Do not discount that Tesla is a great American company. And his leadership is the reason why. And he has kept it an American company. He had several chances where he could have taken it somewhere else. I mean, let's be honest. China is the biggest market for this. And he is putting himself and the company at great risk of having himself eased out of China. Okay, here are the year-to-date price actions on Tesla and Woods 6 actively managed ETFs. Tesla is down 31%. ARKK is down 4%. So you can provide yourself some protection if you want exposure to Tesla. I have it in XLY. But again, do not discount that. Okay? Now let's talk about this. The 200-day. This is a scanner in Trendspider that looks for stocks that have broken through or reclaimed its 200-day SMA in the last 2 sessions. Now, if you don't have Trendspider, again, You can log in and import this, and we'll just subscribe. And then I go over to my chart and I've got it. Click here to open it. And so it will pull up all of these stocks. Okay, this is Amtech. This is Electronic Arts. You can see it just broke through. We need a daily. Let me put it in a daily. We're going to get out of the strategy tester, and I'm just going to put it on daily. You can see it just broke through there. Amazon just broke through its 200-day. Okay, Bank of America just broke through its 200-day. The 200-day is a very important thing. This is the benefit of having Trendspider is you can scan for things like this. But I'll put it to you this way. You can use Finviz as well. Go over to Finviz, go to their screener, and go to technicals. And here what I did, I said, okay, I want two. I want mega cap 200 billion. I want the S&P index. I went to technical. I said, show me stocks that are below their 200-day. Show me stocks that are also below their 50-day and stocks that are below their 20-day. All three of those have to happen. Apple is one of them. So if we go over here to Apple, I'm going to go back to my core investments. But again, you can just import that. It's taking the training wheels off Trendspider does so much more. Okay, look at how Apple has come back. Now, you might have a death cross on this daily where the 50-day goes under the 200-day, and that's bearish. But I put it in the Facebook chat about Broadcom yesterday. I believe that even though this is bearish, where it breaks under the 200-day, where you can see right here, the last death cross, where the stock was trading here, popped up for a little bit. Maybe we're getting one of those, and then it moves down. All of these were buying opportunities. Okay, when it has a death cross, it's been a buying opportunity. Now, how long you have to wait for that? Don't know. But the reality of this is, if you want to start adding to Apple, you add to Apple during these times where it's down on the bottom part of the Bollinger Band, where it feels uncomfortable buying it. Doesn't mean that you go balls deep. But again, that's a nice scan to just put in. Now, let's see how Apple trades on the 4-hour algorithm. We can go into this. It gives you 44.7%. And it told you to get in at 213. Does it mean that we're going all the way up here? No. No. But you put that in. I was even looking at the 4-hour algorithm on VOO. Here's a stat that will blow your effing mind. And why you don't have Trendspider, I don't know. But the 4-hour algorithm, it has 18 positions in the last 2 years. Okay? So the last 2 years, you're going to see 18 positions. You want to know how many win? 72% of those 18 positions win. 28% lose. Your average win, 3.8%. Again, this isn't a highly volatile index, so it won't make you 10, 15% like MicroStrategy or Tesla. But the 4-hour algorithm wins 72% of the time. And it matches exactly buy and hold. Now, you might say, well, why do I want to take 18 positions when I can just buy and hold? Find the entry point and then buy and hold for years, and you'll make more money. Because look at this weekly, okay? We're still going up. We are still in an upward trend. And what I said about Broadcom is I don't believe that the death cross in Broadcom, AVGO, Eli brought this up, isn't there a death cross? Yes, on the 4-hour, there's a death cross right there. But when I go and look at a weekly chart, look at how the MACD has reset. The strike line hasn't come down yet, so we may have more downside, but the RSI is at 46. Okay, and the other thing is we're trading on the bottom side of this Bollinger Band. The top side hasn't come down all that much. But I do believe when you look at the indicators, they're indicating this is a daily. We could see a pop. I don't want to sell this one at 188 thinking that it's going to pop to 214 because that move could be big. So you want to use the tools that are in front of you. And if you want Trendspider, go to Linktree. It's right here. There is a free, a $20 trial for 2 weeks. I'll give you some of my algorithms. If you email me and say, hey, I took advantage of the 2-week trial for $20, You know, you even get one training. So not only do you get, the tool, you can get a one-on-one training from a product expert at Trendspider during those 2 weeks. Sign up for it. It doesn't make sense that you don't sign up for it. And you can import that 200-day. Now let's talk about large cap tech stops. This is the other tool that I use. Now, when you go to my, just so you know, the newsletter, the daily newsletter, it's right down here. You can see it, Daily Stock Pick Newsletter. It is free. Let's just look at yesterday's. Okay, I start this out. Is the market, in this market, you need tools. And I included the 1 hour stock battle strategy. Okay, and I pointed this out. ROBN, you make 43.9% with 10 positions over the last 52 days. It's a good strategy. Find a strategy, trade it. Now, you may not have enough time to, in your day to get in and out of all these positions. So you set alerts. And when you get in and when you get out, it sends you an alert and you log into your little mobile app and you sell it. You buy it. You do whatever you need to do. And then on the newsletter, you have these ads. And the other tools that I'm going to point out, this is Seeking Alpha Premium. Okay, the premium portion gets you the quant rating. It gets you the all of the scans that you can do. And it also gets you the quant rating. I got a bunch of quant ratings coming up that I'll point out. But that's what that gets you. And you get a free 7-day trial if you sign up for it. Then there's the Alpha Picks portion. Okay, Alpha Picks is a curated portfolio made up of 2 different stocks per month, one on the 1st, one on the 15th, and they tell you when to sell. The performance is unbeatable. I am working on a new strategy with Alpha Picks where I will use the 4-hour algorithm and buy their winners and cut their losers. And I want to see what that does. Okay, but I am currently a buy and hold guy with the Alpha. I sell when they tell me to sell. And the bundle is the biggest one. When you bundle up Seeking Alpha Premium and Alpha Picks, you save $159 off the price. Okay, $159. Both of them, it's the Gary bundle. It is the ultimate. When you get Trendspider and the Seeking Alpha bundle, those are the 3 things that I use. And then when you scroll down, I give you links to Spotify, Apple, and YouTube. Then when you scroll down, you get all the notes that I'm currently looking at when I do the podcast. There is no reason for you not to sign up for the newsletter. It is free. All of these stocks yesterday were a buy in the 4-hour algorithm on our watch list. The watch list that I give you when you sign up for Trendspider for the yearly plan. So all of those are good. Now, I go over the laggards. Sometimes you want to see the laggards because if they don't participate, but there's no reason for them not to participate, like Apple and Netflix, you may want to buy those. So these are all the notes that I used yesterday. Okay, that's the newsletter. It's nice and easy. So let's talk about Seeking Alpha Premium. Because this large cap stocks with the highest percentage of buy ratings versus the Seeking Alpha quant ratings. This is a great list. And the point that one of the things that I want to point out, the one line, this one right in the middle, analysts are the most optimistic in the energy, information technology, and communication sectors, as those have the highest percentage of buy ratings. That was a FactSet earnings analyst, John Butters. Love butter. Can you tell I'm dieting? I love butter. In a March 20th report for energy, 65% of that group has buy recommendation. I went over, an energy stock yesterday. I have MPLX in my own personal portfolio. And then there's 3 of the Magnificent 7. Okay, 3 of the Mag 7. Amazon. We just went over. Amazon just broke through its 200-day. Okay, this is one that they're recommending with a buy rating. You go over here and you say, okay, I want to look up Amazon. What does the quant tell me? It's a strong buy. And you can read the Analyze with AI report. And when you use Trendspider, you say, ooh, maybe I should have gotten in there at 199. Because while the algorithm doesn't beat buy and hold, you can see it. It makes you 62% versus 104% versus the last 24 months, 24 positions. It wins 54% of the time. 54% of the time. So I want to find an entry. You don't have to know technicals for all this. That's how the tools work. Let's look at NVIDIA, because this is the other one. 3 of the Mag 7, Amazon, NVIDIA, and Microsoft. Okay, NVIDIA had a buy here at 116. You're trading at 120. Why do you want to do this? Because you win 62% of the time when you buy it. Okay, I do believe that the Mag 7 will make a rebound. Do I think it's tradable at this point? I don't know. They're still stretched. If we see some type of pullback in the earnings that are coming up, you're going to be in trouble. And then Microsoft hasn't participated a damn. Okay? The algorithm makes you 33%, 43% is what you make buying and holding. It wins 46% of the time. But I would say under 400 with the gap up there, I think it's juicy AF. Juicy AF. And you want to know what else I like in the Seeking Alpha Premium? Is that in the morning, okay, I've got a couple of portfolios, like 6, 7. I set them up with watch lists and stuff like that. What's nice is in the morning, I get a full email digest, okay, of all the news stories for that portfolio. And you can import your own personal portfolio as well. But I also get what I like, the rating upgrades and downgrades. You want to know what was upgraded last night? Netflix. Netflix went from a hold to a strong buy. We can go look at it. Let's look at Netflix. Okay. Showed you the chart right there. Strong buy. And when we go to the quant, we can see when it has become a strong buy here in the past, you've been okay. I mean, you're trading almost at $1,000. What does Wall Street think that it's worth? They think it's worth $1,071. Again, if they have a blowout quarter next quarter, I think you're going to see this one blow past. I think it's going up to $1,200. You can see the summary that you're trading at the high end. This is a buy and hold for a long time. I think it's a good stock. Again, the valuation is the only thing that brings this down because you're paying the premium, but they are winning the wars. Want to know what was downgraded last night? Shopify. Shopify went from a buy to a hold in the quant, and it's because of revisions. Again, it's expensive. The revisions for Netflix are up. The revisions for Shopify are down. And when you look at it, again, you're towards that 129. I do think that this is a fine stock. This is in the core portfolio. DraftKings is one that I trade, and I have a portfolio because I want to know when it changes. Okay, QQQ went from a hold to a buy. So you can do ETFs as well. When we look at the quant here, it went from a hold to a buy. And we're seeing it. What changed? Momentum. The momentum has changed. Remember, there's 5 things. In ETFs, it's momentum, expenses, dividends, risk, liquidity. Okay, stocks. We can look at Netflix we went over. Exxon. Exxon went from a hold. I mistyped that. XOM is the symbol. It went from a hold to a strong buy. Energy. Again, energy. What changed on this one? Not a whole hell of a lot. Just probably numbers within the quant. And the sector thinks that it's good. We went over Chevron a few days ago. I like that one. So you get these ratings in your email, and I will include that in the newsletter today. Now, what have I suggested before? Last week, Apple sets June 9th as kickoff day for the WWDC, Worldwide Developer Conference. That rose the stock by 1.5%. Don't tell me this one doesn't have popability. Even though it's expensive, it's a hold in the quant, and it's because of their valuation and growth. The forward PE, you're trading 30 times forward earnings. That's expensive with a growth of 2% revenue year over year. That's horrific. But this is Apple. They have a way of just coming back, and they'll do it. And then yesterday, I told you, GameStop rallies after saying it can use its Bitcoin and cash to buy Bitcoin. They went crypto. Now, this is the quant rating on this is a hold. It's been a hold. This you trade on news. There is nothing fundamentally good about this stock. You trade on news. Let's go and see if we could have traded in one of our strategies. GME in the 4-hour algorithm doesn't work. Let's go and look at the 1-hour stock battle. Let's see if it got you in before this one. Let's see. Got you out with a 3% gain. Maybe you have another strategy that you want to play on this one. Again, you'd have to find it. Maybe the 65-minute. Let's see if the 65-minute has you in. 65-minute got you in. Yeah, got you in the afternoon candle right there. And this one makes you 26% over the last 8 months versus 4.4% if you just bought and held. So big pops. Again, you have to use the tools that are in front of you. And one of the things that I've noticed is that there's a lot of news around Fannie Mae and Freddie Mac. Now, I have traded Fannie Mae before, FNMA. I have traded this, okay? During the 2008 housing crisis, the stock went, let's just go and look at it because it was one of my favorites to trade during that time. And we're going to go back here. I'm going to look at a monthly. Okay, because during this time, and you can see during this time, this was when it just trashed. It went from about a $60 stock down to being worth, 41 cents. When it got under $1, this was 2008. So I was trading during this time. This is a 79% candle, 79%. It opened at $7.50. It closed at $1.53. Its low was 35 cents. When it got under $1 during this time, September 2008, and the government said, we may bail them out, I bought. Okay? Then the next time it was $1.75 for the next month. And I remember I was buying and selling this one just crazily. I wasn't doing my work during 2008. I was working for Earthlink. I was trading this one. And it was a great trading opportunity. Now, go here where it's trading at $1.28 in October of last year. 7 times your money if you got in on this one. Okay, what's this article saying? This article is implying that, for example, my most recent analysis suggests Fannie Mae shares could be worth upwards of $25 in the public market. So if they turn Fannie Mae into a public stock, it could go to $25, and you're trading again at $7.31. Where'd the algorithm get you in? $6. Now you may say, I don't want to trade the algorithm. It only wins 31% of the time, but it makes you 366% over the last 8 months. That's the 65-minute algorithm. You can trade this one in the 4-hour. It got you in at $6.14. The point is, this one may be in a very upward trend. And so the value of it may greatly outweigh what they're doing. And if they take it public, Bill Ackman has been big on this one, huge on this one. So I want to put it on your radar. I want to make sure that it's in a watch list. So I'm going to go over here and I'm going to put it in our watch list. And so then I scan on it. So when I scan any scanner, whether it's a 5-minute, whether it's a 4-hour, whether it's a daily, whether it's a weekly, I'll get the entries if I scan using Trendspider. Okay? Now, I want to just point out to you a couple of things. There were 2 newsletter. Money changes everything. Why should I invest my money when this is more financial independence? And if you're not interested in financial independence, these don't make any sense to you. But again, this is about more about a lifestyle. And she goes over a latte coffee. It's not life-changing money when you're not buying lattes, but it adds up. And when you make those little changes in your life, it all adds up. And that's, why is this bitch on her high horse telling me to save money when I'm pretty sure I'm going to die at 50 or the government is going to fuck us all? She makes the point. It all adds up. It's like a 5-minute read. I suggest you read it. And then Austin Hankwitz. I always thought the dude was like a hippie, a long-haired, red-haired hippie. I thought he would look more like Ross Cameron than he does like that. But, he's a 20-something, professional dude in a suit. But he did this podcast. The Spending Traps, Escape the Psychology of Broke. This is a fantastic podcast. Okay, I've got 28 minutes left in it. It is a great podcast. I like it a lot, and I'm listening to it. And again, Austin's great on it. I think his co-host is fantastic. His co-host has built businesses worth like $300 million. So I like it. So I'm going to leave you with one other one, boner pills. Strong volume offered, anchored VWAP. Go and Google anchored VWAP. Okay, go and Google it. Understand it. VWAP is volume weighted average price. Okay, there are a couple of things that you want in volume weighted average price. And when you see support, using volume weighted average price as support, you could pop. And we're seeing that right here. This is a daily chart that goes back to September. When the volume, when the price of HIMS gets down to the VWAP, it bounces. So let's see HIMS in the 4-hour algorithm. Does it work? Let's see. Makes you 166% versus 262% buy and hold. You win 29% of the time. The algorithm got you in here at 33.42. We may be heading up. Now, this isn't a go out and buy this one, load it in, back up the Brinks truck, take a mortgage out on your house and throw money at it. No. The valuation is crazy on this one. They're not making money. Okay? Their growth is fantastic. 69% revenue growth year over year. There is some external issues with maybe the compounding that they do for GLP-1 might be taken away. And if that happens, that's a really bad thing. So understand what you're getting into. But again, if you want a technical way of actually looking at this, the MACD is down below the oscillator. We've had our turnaround. The 9-day starting to turn positive. The RSI is at 53. When you look at a weekly, the MACD is still stretched. But again, I point out, volume weighted average price, we have done this. Now, this would be a trade. If I were doing this, this wouldn't be a buy and hold. Oh my God, I'm going to load into this and just buy it and forget it. This would be a trade. It's a company that's not making money. So I don't know if you can trust it, but it looks damn good. Looks like an opportunity. And in this market, you want to find opportunities. That's why I brought up Fannie Mae. That's why I'm bringing up HIMS. That's why I bring up Amazon. That's why I bring up Apple. But they're different. Apple and Amazon are stocks that I believe in long term. Fannie Mae is a trade. HIMS is a trade. Identify those things before you put your hard-earned money into it. And then understand that maybe that money that you're putting into it, you may have to, bring your lunch to work for the next week to save $40. My friends are shocked that me and my girlfriend, I shop at Walmart every week. I spend about $110. We don't go out to eat. The two of us eat at home for $110 per week. People are shocked at that. But the reality of it is I'd rather save my money and invest my money. And that's the way I've always lived. And it's the FIRE. It's financial independence, retire early. I'm not miserable by any means. But you've got to make certain lifestyle changes to be able to retire early. And so I thought it was important, but I also think this investment journey is important as well. Find your opportunities, find where you want to put your stock, have a VOO and QQQ as two main ETFs in your portfolio, and then trade around stuff. Find the opportunities. There you go. That's the podcast. It's Wednesday. It's hump day. I will talk to you tomorrow. Take care. Bye.
I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.